Hello, everybody. Dr. Richard Smith here with the Foundation for the Study of Cycles and Cycles TV. Today is Tuesday, July the 1st. Wow, H2, second half of the year. Remember when we were just at the beginning of 2025? And now here we are halfway through 2025 and still on fire from the incredible conference, all the energy, really this community. So that's the thing that I am most excited about, is what this community is capable of, where this community is going. So many interesting people that are interested in cycles. So that bodes very well for our work and for the Foundation for the Study of Cycles and for the future. So please continue to tell friends and families to check out what we're doing, subscribe, like, join, become a member, upgrade, because a lot is happening and a lot is coming. So welcome again. Lars did a great show yesterday. If you haven't watched it yet, on the new stability score. Lars, I'm not sure you should be giving away the farm every time. So, man, do we get to keep anything for ourselves? Anyway, Lars is unbelievable, what he delivers, what he develops, and what he shares. So thank you, Lars. And if you want to know more about the new stability score, watch Lars's show from yesterday and get all the details. This is institutional quality stuff, gang. So love it that we're here with individual investors, but tell your institutional friends too. All right, so new all-time highs in equities in the S&P 500 and NASDAQ. By the way, that's what I've been calling for all year long, even in the depths of despair. And here we are. So yeah, I wasn't expecting a 20% correction, but throughout it all, it was pretty clear that, look, things haven't really changed. So including from our conference, hearing from Larry Williams, Jake Bernstein, Akhil Patel, others, still expecting the 18.6-year cycle top in 2026, et cetera, et cetera. But we have had new all-time highs. Definitely have some overbought conditions in the markets. And today we're going to take a look at equities, weekly and daily data mostly. Give a little educational time on our cycles analyzer, look at the new stability score, et cetera, some of the new tools. But dig into, hey, okay, here we are mid-year, we're past the sell in May and go away. We're into the summer doldrums. We've had a huge rally, definitely overbought. Is there anything we can see about what lies ahead? So let's go ahead and dig in. All right. So just starting out here briefly, we can share my screen now. Where's my screen? Why isn't my screen? All right. So just briefly, this is a site that I like to go use, investing.com/economic calendar. Zooming in here just to see what's going on today. I usually go down and look for the 3-star events. You can filter for them as well. But this morning we got manufacturing prices and job openings. And last week we looked at fundamental cycles, particularly the 65-month cycle, 65 months, 5.3 years. Maybe it lines up with half a sunspot cycle. I don't know. But we got higher manufacturing prices. So we had forecasts that producer prices would be going up and unemployment would be going up, while there's still some room for consumer price inflation to be coming down. Now, these are broad strokes, right? They don't, they unfold over 6 to 12 month periods. They're 65-month cycles. So, you know, a year for that cycle to kick in is not unheard of. But we did see manufacturing prices up a little bit more than expected, 69.7 versus 69.6. And we saw job openings up significantly, 7.8 million instead of 7.3 million job openings. So that was in the direction of what we were talking about last week. All right, so again, I'm just showing you, you know, how I do things so you can also learn to do them yourselves. Here I am at Yahoo Finance. Go to markets and world indices right here, okay? And you can see all the tickers for any indices you'd want to look at. And of course, with our cycle analyzer, you can look at anything that you can pull up on Yahoo Finance. You can look at it in the cycle analyzer. So we're going to start with the S&P 500. That's caret GSPC. Okay, so I've gone here and I'll just, let me just start over. So you see GSPC-W for weekly. Yahoo Finance, :AFI. Okay. So actually, I'm just going to start from scratch here so you can see the whole thing. All right, so here we have pretty clear on the spectrum this one massive peak. Of course, this is the famous 41-month cycle, 180 plus weeks, currently at 186 weeks. The stability score on this at 0.86, which is off the charts. Stability scores above 50 are what we're looking for. So this one, of course, is the cycle of cycles, right? If we incorporate all the data in the history going back to, what is this, 1928, you know, you just really don't see this kind of significance and stability. Even going back, this is 5,100 weekly bars, the cycle at 182 weeks with a stability score of 65%. Going back to 1928. Okay, so that's statistically significant, I believe, is the way it's said in the profession. But let's go back and anchor ourselves off the 09 low for the weekly data. Update our analysis. Okay, we see that cycle spreading out a little bit to 186 weeks based on the more current data. We'll zoom in here a little bit. Add our cycle. I'll go in here to settings and set the scanner to add the Dominic Peak Finder and update. Of course, rank 1, we'll turn on that and we'll turn on the cyclic RSI. All right, so here's the basic cycle analysis here. Of course, we've known that the weekly cycle topped. We can make this a large chart, so we're just looking at the cycle alone and the cyclic RSI. So we've got new highs here in the S&P 500 as of yesterday, 61.31. we've got a cycle top. Of course, it's not unheard of for there to be right translation, meaning the top comes in price later than the top in cycles. What is also concerning, though, is this massive momentum divergence, right? So you've got the peak in momentum here on the cyclic RSI back in 18. Okay, then you got a new high in price here with a lower peak in momentum, and now we've got another new high with a lower peak in momentum, and new highs with quite diminished momentum still. Okay, so one of the things that a lot of presenters at the conference said is cycles are a setup, not a trigger. So Jake Bernstein in particular, setup, trigger, follow through, right? So this is definitely a setup, not necessarily a trigger, but just a basic analysis of the weekly data in the S&P 500 says we're closer to a top than to a bottom, and we've got significant declining momentum on rising price. Of course, that lines up with the observations of the McClellan family in the McClellan report as well. So definitely a hesitation. So that's the S&P 500. Now let's go back here to, we could look at the Dow, but let's look at the NASDAQ composite. So we'll keep this up. We'll go new window. IXIC-W:YFI. All right, so again, pretty clear, 185 weeks. Very similar to the S&P 500. Going to add the dominant peak finder back in, set that as my default profile. So 185, there's also this 71 week, but the 185 is very clear and not sure why you'd want to use anything else on the weekly data. And again, momentum, definitely still rising here. So that's positive. You can look at a larger chart, right? Zoom in a bit. Let me go back and add the cycle in. So cycle is past the peak, new highs, not a new high in momentum, but momentum still is rising. Same with the S&P 500. Okay. Moving on, let's try DJI, Dow Jones Industrial Average. Same 185 week peak. Same situation with momentum. Not quite new highs in the Dow, interestingly, right? So haven't been new highs. I'd say momentum is a little more muted in the Dow. So that's interesting. And then lastly, we'll look at the Russell 2000 for the small caps, RUT. All right. Also 187 week. Very interesting how much weaker the Russell is. It's still got quite a ways to go before it makes new highs. And momentum, yes, moving up, but also still quite weak. All right, so that's a pretty good picture of the weekly cycles in the S&P 500, the NASDAQ, the Dow, and the Russell. There's one more that I wanted to look at, actually, the New York Composite Index. Let's take a look at that too. So the New York Composite definitely got new all-time highs in the New York Composite. Momentum looks a little better, I'd say, than the Dow and the Russell. A little closer to what we're seeing in the NASDAQ and the S&P 500. Didn't have as much of a drop in momentum. It's kind of interesting. Yeah. Okay. But the picture is very similar across all the US stock indices on a weekly basis. They all show the 185, 187 week cycle, which is about 41, 42 months. So that is, 36 times 6. Yeah, 36 plus 6 is 42. So 3.5 years. 3.5, 3.4, 3.5 year cycle. All right, now let's go look at some daily data. Okay, so we'll start with the S&P 500. I'm working on a new computer here, so I'm not sure why my profile settings aren't sticking. But we've got 850 data points here going back to Feb 22. We got some very clear cycles here, all with good stability scores, good strengths, right? We sort by strength still. We got the 119 with the 65 and the 172. So here's the 119, good definition in the spectrum. That's the 172, also pretty good. Just would ideally like to see this right side a little deeper. But 119, 172, it's 318. It's kind of far out. And I always just like to keep an eye on the 80-day cycle as well. All right, so here we have a couple of strong cycles. We could add a little more historical data to just take things out a little further. Let's see here if anything jumps out at me. Let's say we wanted to anchor back on the COVID lows here in March 2020. That gives us about 1,300 bars. We update our cycle analysis now. Still see similar 182, 125, and 80. Gives a different picture though, doesn't it? Whereas before, if we just use less data, we were kind of seeing this top being more significant. Now it looks a little less significant with possibly more highs, but this is the nature of cycle analysis, okay? Cycles are not a holy grail, right? They change based on their dynamic. They change based on the amount of data you're using, what cycles you're looking at, the way you've got your filters set up. So we're always trying to get an approximate idea of what's happening. This is not a mechanical trading system. But I think either way you look at it, especially this 80-day cycle here, is suggesting caution in the daily data. But meanwhile, we still have momentum, and let's zoom in a little bit here, right? So, okay, here's the 80-day cycle. We've still got momentum going up, and momentum could well break through the top bar, which is also often another buy signal, okay? Remember, it's got to go above the top bar and then come back down on the cyclic RSI in order to trigger a sell. So yes, the 80-day cycle is looking toppy. Yes, we have a negative momentum divergence with the new highs, but momentum is going up, and we can't rule out the possibility of higher prices. The best predictor of higher prices are new highs. And we're going into the 4th of July weekend, and oftentimes there's seasonal bullishness around holidays. Who wants to sell the United States short going into the 4th of July weekend? So we're definitely seeing some toppiness in the cycles on the daily data. It's a little alarming how that also coincides with toppiness in the weekly data. But remember, those weekly cycles can have extended right translation, right? 182 weeks, even if you take 10% of that, let's say, 20 weeks, that's 4 months. So just something to keep in mind. All right. Moving on to the NASDAQ. $118.80. Turn back on my ranking. Okay. Got good stability scores here, 75, 66, 63, and even this 80 here. Put all of them together. This 118 cycle here seems like the strongest to me. I mean, look at the strength. You rank it by strength. It's much stronger than the other cycles. There's some lingering bullishness out here from these longer term cycles like the 175 and the 315. But again, it depends on what your time frame is, right? Very important when you're investing or trading to know how long you want to hold, right? I've said it many times. Bruce Kovner famously said, Jack Schwager famously said, all the market wizards are pretty religious about risk management. And Bruce Kovner famously said, 90% of risk management is knowing when you'll buy, knowing when you'll sell before you buy, right? You plan on being in the market for a week, a month, a year, a decade, makes a huge difference in terms of what you should be looking at and how you should be reading things. Just looking at the NASDAQ now on the daily cycles, though, 118 days, right? Those are trading days. So, you know, top to top, let's see if we're at a top right now on June 25th. The next bottom would be September or end of August. So that's a June, July, August, right? Couple months. And then into October. Okay. But momentum is still going up. So don't short change momentum. And if we add in the 80-day cycle, makes it even look a little scarier. So similar topping on the daily data in both the S&P 500 and the NASDAQ. And we can see it here by adding that in and zooming in a little bit. Okay. All right. Carrying on, let's look at the Dow. Yeah, we got a 227 here and a 91. Strength is a lot higher on the 91. All right, you can see it here on the spectrum. This 170 looks interesting, as does this 227. They've all got pretty good stability scores. Again, momentum going up. The shorter cycles looking toppy. The longer cycles a little less so. Depends on what your horizon is, but I'd say again, the daily cycles are signaling caution, but not sell. Okay. Keep an eye on this. But momentum moving up. And the cycles, you know, topping, but not a huge red flag for further upside. All right. The Russell. Big cycle at 119. Also at 173. Same situation, right? If you're looking at just the 119. Definitely looking toppy. Momentum looking a little weaker. Did have a huge low in momentum, moving back up. But the Russell looks weaker to me. And then finally, New York Composite. Cycles are a little different on the New York Composite. So this 167 is interesting. $326. So that's pretty much a perfect harmonic of 167. And what else do we got here? 90, 57. Same situation. The shorter term cycles are topping. Momentum still looks pretty strong here, still going straight up. Longer term cycles suggest, you know, maybe a little more upside. All right. So I think that is a pretty good picture. Let's talk for a few minutes. So I am Back in the archives of the foundation, and good to be back here. Been fixing things up and cleaning it up, hoping to be spending more time down here. On the whole, what we just saw, we know the 41-month, 180-plus week cycle is topping. We know there can be right translation. We've got big negative momentum divergence on the weekly charts. There's plenty of justification for being cautious, if not outright bearish. But cycles are a setup, not a trigger. On the daily cycles, we see the 80-day cycle, which those are trading days. So that's about 4 months, top to top. So about 2 months, top to bottom, turning, but the momentum not being there yet to support a downside move. And then we also see the longer term cycles still showing a little upside. And we're going into the 4th of July weekend. So on the whole, I wouldn't be looking for a major sell-off this week. Maybe by, middle of next week, we might start to get more serious about it. Could see a correction. And the corrections could be significant. There is that risk when you have the weekly cycle topping and you have the daily cycles kind of coming into confluential, if that's a word, tops, right? Confluent tops. So that's kind of what I'm seeing on equities. Momentum still moving up, but definitely not a back up the truck buying moment. All right. Let's see what's on your mind. Mark, new stability score superseding Bartel's score now. So Lars and I are using the stability score more, Mark. We do believe it's a more robust score, but the Bartel's is a very excellent statistic as well. So, we're not throwing the baby out with the bathwater. But I can just tell you that Lars and I are excited about the stability score. We do think it's a significant innovation in cycles analysis, and we're very happy to be able to bring it to our community here. The Bartel's is still available. You are not able to see both of them simultaneously right now. Maybe somewhere down the road we'll be able to. All right. Franz, you explained why you prefer BTC futures, but your colleague Lars is using BTC CDS. It's giving different results. Therefore, I would like to know what you think. Have I said before that cycles analysis is something that you have to look at multiple things and kind of get a feel for how they all fit together? So there isn't an easy answer, Franz. I trade futures, okay? Lars might be doing something else. You might be doing something different. So you have to use it yourself. We're not selling signals here. We're educating about how to use these tools. And I can tell you that I trade futures. I like to use the futures. I like to ignore things on the weekend. I don't want to have to think about markets over the weekend. So that's my personal preference. The fact that Lars is using the full data, he must have a reason for doing that. Okay. So sorry, I just don't have a pat answer for you there. All I can tell you is that I like to use the future stuff myself. I don't have a back test that tells me that's a better method. It's just a personal preference. 3 times the longest cycle for analyzing. So why do you just use 850 if the longest cycle is over 300? Yeah, again, if you want to look at a longer term cycle, then you should add more data to get at least 3 iterations of that cycle. So normally I'm looking at cycles kind of from say 80 to 200, maybe 220. So 850 is enough for me. Sometimes if I want to look at shorter cycles, I'll even shrink the data set down to say 500 points, or go down to a lower time frame. But if you're going to use cycles above 300, then absolutely you should use more than 850 data points for that. And it's easy to add more data to your study there. So I like to see minimum 3 iterations of a cycle. So hopefully that helps. DR, as the Russell 2000 stopped being a risk on bellwether. Yeah. It's an interesting one. I don't know the answer to that question. Small and mid caps have been beat up for so long. I assume there's less downside risk to a degree. I really would have liked to have seen the Russell making new highs. I'm still hoping that we're going to get there, actually. But it certainly hasn't been the darling of the markets, right? Trump, big, beautiful bill just went through the Senate. Yep. All right. What else? All the cycles you mentioned had a low in April. Seems odd. Is this significant? I think that Lars has shared some of the geomagnetic research that we've been doing that suggested that there was a peak in the geomagnetic disturbances in April. When those peak, they are creating, more of a sense of dis-ease in us. And that's been working its way off since mid-April, right about at that bottom. And I think it peaks again in mid-July. So there you go. The fact that the cycles had a low in April, look, we are doing the cycle analysis that includes that data. So yes, it's going to kind of anchor on those lows and kind of fit the cycle phases to those lows. So when you're looking at it kind of retrospectively, you can't really say that, they forecasted those April lows, but I'd have to go back and look and see if they did that or not. Franz, you're welcome. How do we get the geomagnetic storm data to use? I think you have to go back and watch Lars's presentations on it for now. So that is something that he spent a lot of time on. It's not available just by default in the foundation work. But Lars has done some coverage of it. I think he did some recently as well. Maybe look at last week's show. Again, Lars, we do need to make some money for ourselves one of these days. All right, gang. I think that's a good picture for now. We've gone about 40 minutes. So I still think we're going to see pressure on unemployment, not seeing CPI rise dramatically yet, which could well give the Fed room to ease. Personally, I think Powell is doing the right thing by keeping rates restrictive, because I do think that CPI is going to bottom in the next 6 to 12 months. And I think it's going to turn back up. So maybe Powell is watching the cycles and sees what's the cycles suggest may well be coming. But my guess is, with all the pressure Trump's putting on, the Fed might blink, especially if unemployment starts going up and inflation CPI stays down. We could see the Fed blink, which of course would fit in nicely with an off to the races 18.6-year cycle top in 2026. Meanwhile, we still see at the moment new all-time highs in the S&P and the NASDAQ, not in the Dow and the Russell. We do see them in the New York Composite, so that's interesting. We're seeing topping on the daily cycles, at the 80 and 90-day range, but still a little extension into mid-July, which helps us get through the 4th of July holiday and the early in the week bullishness. You know, was it Yale Hirsch, don't sell stocks on Monday? So that's what it's looking like to me. Hope this has been educational and useful to you. Remember, of course, pay attention to your time frame. It matters if you're looking at what to do in the next week, the next month, next quarter, next year, next decade. Totally different analyses. Everybody is unique. You are utterly unique, cosmically unique. Okay, so your situation is not answerable by a mechanical trading system. You are not a mechanical trading system. So please do your homework. If you have a financial advisor, consult with your financial advisor. But make sure you understand your context. You do your cycles analysis in your context. That's how you are successful long term. Thanks for tuning in, everybody. Have a great week. Hope if you're in the US, hope you have a great 4th of July weekend. And I'll see y'all next week. Bye-bye.